By the way, your quiz is going to be live at 12 o'clock today. You have until next Tuesday, the 13th. The last one is slightly tricky. Net capital spending. Not speeding, spending. It basically means how much new money did you spend on capital goods, right? Capital goods are essentially fixed assets. So how much new money, you bought 20 new cars and you paid $1 million for them. They're fancy cars. But you also had some old cars, you sold them, and they were worth $200,000 in the books. That means on net, you spent $800,000. That's your net capital spending. So there are two ways we can calculate it depending upon what information you're given. New purchases of capital goods minus sales of existing capital goods at their book value. At value. If you sold an existing car you had for 30 grand, but the market book value was only 20, you only write the 20. Where do you think that 10 goes? Remember, in accounting, everything has to be double entry bookkeeping. To cash and to actually, in terms of assets, yes. But it also goes to income statement as profit. As far as IRS is concerned, you sold something for 30, then you told IRS that the cost was 20. So IRS is going to say, come to Papa, give me the taxes on those. We're going to talk about those, for example, when we calculate salvage values and capital budgeting. Or if you're not specific to giving that information, an alternative way to calculate NCS is not hunch, change, and net fixed assets add back the depreciation. The reason you add back the depreciation, think of it this way. Suppose you did not spend any new money on capital goods or you haven't sold anything you already had. What is your change in net fixed assets? I'm telling you, you didn't spend any new money, you didn't sell any of your goods, but I'm still telling you that your change in net fixed assets is not going to be zero. What's going to happen to your net fixed assets? Is it going to go up, down, or stay the same? Don't ask me, I'm asking you. Yes, because net fixed assets are subject to depreciation. Not all assets have been depreciated to zero already. I bought a car last year. I may have, it's probably subject to 5-year makers. So I wrote off 20% last year. But this year I'm going to write 32% off. Okay? That means that 32% is going to reduce my value of net fixed assets, even though I haven't spent any money or I haven't sold anything. That's why I need to add that back. So if you only know what happened to net fixed assets and depreciation, you can still calculate net capital spending. By the way, you probably realize since NCS has a minus sign, depreciation actually doesn't figure out in the cash flow from assets at all. If you think about it, OCF plus NCS is net income plus interest minus change in net fixed assets. So depreciation, technically speaking, doesn't play any role at all. But depending upon information, you may need to calculate them separately. Okay. Just in case, I mean, things like net fixed assets, how much equity you have, how much total liabilities you have, they move according to an equation. So ending NFA is equal to beginning NFA plus net capital spending minus depreciation. That's how I figure out, among other ways, that NCS should be change in net fixed assets plus depreciation. So I start with a certain value, I add new machine and equipment, but I also have to take out the depreciation. Ending long-term debt, beginning LTD plus net new borrowing. You may think of net new borrowing as change in long-term debt. Right? Remember, those interest payments are never considered a liability. So just because you pay them doesn't mean it reduces your liability. That's just an expense part. It goes separately. One more thing I was gonna do. Ending equity. Plus new share issues minus repurchases. This part in red or in blue, I don't know. Let's pick my favorite color ever. Turquoise. No, that's not what oh, that's what I want to do. You know what turquoise comes from? It's a French word that means stuff that is related to Turkey. Turquoise. But have you guys ever been to Mediterranean, especially the Aegean Sea? That's the color of sea. It is goddamn beautiful. I miss it. And this turquoise part is actually the net new equity. Okay. So given information, you can calculate different stuff. All right, let's do a mock quiz. I thought about doing a video of just a mock quiz, but I'm doing it in class anyway, so I decided against it. I basically did essentially 2.5 mock quizzes on the numerical part to get all those questions. And we're gonna start thinking about reasoning behind your answers. And for Jeopardy, that's not an issue, because we talk about reasoning after things in grading. But Remember, you guys have a comprehensive final exam, and it's 15% of the grade, so you can't simply say, if I get a 40, I'll be just fine. No, you ain't. You know, unless you were able to score 120% from Jeopardy, maybe. But other than that, 40 in final exam is not going to get you an A. But then again, you know, if you're able to score 120 on Jeopardy, why would you even be in a situation to get a 40 in the final exam? But it's the format, you guys kind of are not used to it. They will be multiple choice questions. Nothing open-ended, no true-false questions. You will get half the points for giving me the right answer. You know, multiple choice, the correct answer is the best answer. Okay? Sometimes more than one choice